Welcome to Trading Lounge and the Gold Silver Report for Friday, July the 23rd. And starting with gold here, we're looking at a couple of different counts. So wave 3 here with an ABC here for wave 4, and then up for wave 1, back for wave 2, up for wave 1, back for wave 2. So we can investigate that a little bit further shortly. The other count that we've got is a triangle pattern that we've been looking at as well. So we'll go to that. I mean, obviously with this one here, if you wanted to trade this, buying new highs would be sufficient, but I think we've actually just got a little move down here first before we head off, but we'll look at the intraday in a moment. The other count that we're working is very similar, slightly different, but same but different. So in this instance here, we're looking at wave 3 over here with an A, B, C, D and E here for wave 4. So not a lot of difference, but a difference. So yeah, let's go in and have a little look at this here. So I think we can go to... So heading up to the D wave here, that's what we're looking for, and we're looking at this being an A wave, an A and a B and a C wave here. So in this instance, we're also looking at a triangle pattern in here further too, and we're going to have a look at that as well. But we think there's one more little move down here before seeing further upside here. And I kind of hope that's the case really, because it's good when it drops below the level and then find support back up on the level, because that means that it's tested down, found demand, and then it's reacted from that. So another spike down would be good for this. Yeah, so let's just move in on this triangle pattern here for a little bit and get that sorted first, shall we? So on the 2-hour chart, we can look at the triangle pattern like this, and then this would just take us up from that point. We'd view that as some sort of impulse wave, but I haven't really pulled it apart yet, and wave 2 and moving up in that way. So yeah, the important thing here is from wave D to the low here, this first box here is the 61.8%. So going long above this one here would suffice. But yeah, so as an A and a B and a C and a D and an E wave here, that sort of works all okay a little bit. Not so much the E wave here now, because we've got more like we've got 5 waves down, so that's a little bit tricky. So I think what we'd be looking at now is using this as wave 1 and 2 here and 3 here and 4 here and 5 here. So basically coming in on a low here before heading off in that direction. So we're going to look at that now on the tick chart. I need to bring some more data in here. So 20 should be enough. Okay, so the two counts that we just talked about are here, and we just need to go over them a little bit. So with wave A over here, then we can take the path of the green ones here, where we have wave A here, wave B in green, wave C here, wave D here, and wave E here, and then we could push up. So if you see a move down from this point, then you could go long above this top here. If you see a nice, decent move down from that high to that low there, 50% or something, and a move up, well, then you'd want to go long. You want to be long above there at that point. But if that doesn't happen and we just keep coming down, then this is what we'd be looking at here. So over here where we've got the orange wave A, then we've got the A wave here, the B wave up here because it's in 3 waves. And then we'll look at this as wave 1 here and 2 here and 3 here and 4 here, and then down for wave 5 here to finish that off. So we'll be looking at a bit of an ending kind of thing occurring at that point. So basically with both of these counts, it's just a bit of a waiting game. I mean, the thing is because if it's true, if this is here, if this is in an A and a B and 1, 2, 3, 4, 5 here as a B wave up here. Well, we know that this is corrective, bullish corrective, so it just needs to finish off this, so as 1 and 2 and 3 and 4 and 5 here. So if it drops down below the 18 again, this level here, then that's a good thing. And then we can look over this side over here for a classic trading levels pattern in that space there. So yeah, you know, that's how that works, which is just this picture here. So if that's the 18 here, and let's just imagine the market drops below the 18, tries to come back up and get to it, it doesn't, it reacts from it, but eventually finds the first high above the level. That's your reference point, your second point here, and just allow it to do whatever it does. But if it takes out that first high here, that's the one that you want. So that's kind of what we're looking for down here, really. I won't go in there and draw up at the arrival, the reaction, the first high above the level, the ABC correction. And so just stick that on top of the, above the first high above the level, if that's going to be the case. So yeah, there's a good possibility that, I mean, it's a very awkward count, and it's not easy, and I could certainly make a mistake within all of this. But yeah, looking at this as being 3 waves up here is telling us that it's corrective, and it's likely to be a B wave. It can be part of a triangle as we've been working. That would need to drop and move up at that point here, and then move up from that point. So you can, if that's the case, you can start looking to be long at that point. But otherwise, to see this, you know, move lower in here first. So really, that's it in a nutshell. And even if we looked at the more bullish counts, then it would still need to go through the same process over here, which we can look at as well. So I'll just, I'm not sure where I put that. Let's just check. Okay, yeah, well, this was quite an interesting count for being more bullish. So wave 2 here, looking at all of this as wave 1, and then an A wave, a B wave, and this is all pretty sort of messy in here, but this is also the 50-60% retracement level. So we'd expect it to drop into this box before finding its way back up here as that first high above the level, to give us our first inkling of moving in on this level, so to speak. So really, when we, you know, I know this has been a bit laborious and time consuming and all the rest of it coming in off this low here, and we've spent a long time across here, which is it's complicated. But yeah, don't fall asleep at the wheel just yet. So we may just be having our last little leg here before moving off here. So seeing it come down to close to the 1780 is still certainly on the cards at that time, at this stage. Yeah, so that's kind of it in a nutshell. Let's have a look at silver. So with silver, we're also looking, I mean, I've got a negative count and a positive count, and I think it's good to look at both of them. So just imagine for a moment, we've got wave 1 up here, and then we've got this A wave, B wave, and 1, 2, 3, 4, and then going down for 5 here. In this 5th wave here, we've got 1 and 2, and the 3rd wave, we've just been monitoring the bounce off here for the 4th wave. And here, once again, we've also got one more move to the downside. So at the $25 mark here, we want to see the market drop below the 25 and then create a classic trading level pattern sitting on the 25 as the long trade setup for this. I want to have a look at the bigger picture here. I think I'll just have a look at the weekly thing here. Let's just move some of these around a little bit. We don't need these. These are just left here from chatting last time about things, shooting the breeze. This is, well, really, that's probably not the go there, so I'll leave that in there. But what I can do is, let's just copy a few of these. And we'll put these in play. I just want to talk about this for a second here. We need to know at what point the market's going to be bearish rather than bullish in this video. So as a bearish count, then it would look a bit like, it would look like this. And that would sit on there. We can pull this apart in a moment. This here and this here. We can talk about this spike and all that in a moment. So I don't think this is, I suppose it's very difficult to count 5 waves up here, by the way. You could probably look to do it in some other way by putting 1 and 2 here and 3 here. I mean, for all of this to be wave 4 here, it just seems a bit sort of smallish, you know. So I'm looking at this as possibly being in a wave A up here for this. But I don't know about that, so we need to check that. So I'm not going to leave that there. But we definitely need to do some work on that, rework that trend and try to understand it better, because this is too big here now. So if this was going to be the case, if this market was going to come down here, let's just say to the old lows here somewhere before moving up here higher, then the thing that would secure that move here would be a breach of this low here. So that's just below the $24 mark. So if that's breached, then you know that we're going to be looking for a bigger move down this side here. It's as simple as that. So if I go to the daily chart now, just to sort of investigate that a little bit further, we can look at this. I'm just looking at the bearish side first. So we're looking at this as wave A here with a wave A here. And then I'm looking at this here as an A wave, a B wave, and a C wave up here to this. So basically an A wave to here, and then a B wave here, and a C wave over here for that. And like I said, if this B wave gets taken out here, that's going to confirm that we're going to come down lower at that point. So as long as that stays in, then we can look at this as being up for 1 and back for 2 here, which I don't particularly like, because the wave 2 is much more time consuming than wave 1 here, if we're going to look at it like that. I mean, we could do some weird things and come back over here and try to get wave 1 out of here as an A and a B, and as well. It's difficult. 1, 2, 3, 4 overlap 5. It's hard to get wave 1 out of here, but you could get 1 and 2 here, and 3 here, and 4 here, and 5 here. So all of this here is wave 1 here, and ABC for wave 2 here, and then wave 1 and 2 here again. Or if I put this B wave up the top here, for example, then I could look at this as being the C wave over here for that, because I'd have 5 waves down as 1 and 2 and 3 and 4 and 5. So an A and a B and a C here for this finished off here, and then looking at this as wave 1 and wave 2, and that's what we're trying to do. But I'm saying that all of this here is wave 2. It's really too big compared to wave 1. I know markets tend to wait for other markets to do time and extend things out, but as a wave 2, that, you know, as a wave 1 up here and a wave 2 pulling back, it's a bit of a long shot. But just, it's important to have a look at everything and discuss it, and then come to some sort of conclusion. So today's video about this bearish count here, if $24 is breached, then you know that we'll be looking at, we need to look at a 5 wave move down through here. And we can look at the 5 wave over here as well. We may be able to even go in here as some sort of 1 in here and 2 maybe over here or here. And I mean, it looks like a 4th wave here and a 5th wave down here anyway, so we could probably start squeezing it in this way as well. It's just a little bit short. I'd still want to see it drop down a bit, you know. At least it'd be nice if it took that B wave out. So we could tighten it up in that regard. So I'm giving you the bad news and then the good news. You know what I mean? But it all comes down to the 25 here. So basically we're seeing the market have a little dance here, and we want to see it above the level and below the level and do a little bit of time there, and eventually it might find, like this is a little bit of an example here. So the market came down, had a bounce, went through and came back up and sat there. See how it sat there? And we need to be able to count 5 waves up into that move there. That's kind of what I want to be seeing over here. And we could do that by looking at this count, or we could look at, go back to that bullish count. I was also looking at, there's a bit of distance between this wave B low and this current low over here, but that's not the same for all markets. I was looking at, this is Sprock Physical Silver Trust, and we can see that, you know, if I gave the same count over here, see, I'm not worried about that spike there because I just feel that it wasn't in the same line as all the traffic. It was something that came out of left field. And from this low here, we got 1, 2, 3, 4, 5 here for the A wave, a B wave, and then looking up this as a C wave. In silver, it's easy to count five waves up here. That leaves us with 3 waves here. So looking at this here as an ABC for the A wave, an ABC for the B wave, and then up for the C wave to make wave B here, and then coming down for wave C, wherever that may be. That kind of makes sense. And here we're much closer to that low here. But like I said, if it, you know, and it looks like 5 waves down here, doesn't it? So, I mean, if we do breach this here, and then we start to see impulse waves to the upside here, then we could also, you know, look to be long above here. That's what I'm trying to figure out, you know. I mean, normally there's equality between the length of wave A and wave C here. So, you know, even if it came down a bit, that would be quite reasonably close to the length of this, you know. Not as much, but possible. So we can go there to there, just roughly speaking, just so sometimes you look at things and they look too far away, but yeah, it's much further down, isn't it? You're testing those wave A lows there. So but let's just see how that I just wanted to point out that wave B low here. If that's breached, then it's difficult to look at this as wave 1 up here in silver. Okay, so it's a closer finish here. So we're probably looking at something like this realistically, an A wave here, ABC for the B wave, and a C wave here. How far this will come down, I'm not quite sure, but that means that we need to go back over and study this top here, which was really quite messy. And most of the rest of it's sort of okay-ish to a point, but we still don't have 5 waves down from this top here as 1 and 2 and 3 and 4 and 5. So we'll need to see that and see how that finishes and see what we get over here. So there's still a lot of work to be done here for all of this. And the other thing that we could, it's difficult. I mean, even if you took this as the low over here and looked at this as 1 and 2 here and 3 here and 4 here and 5 here for wave 1 up here and an ABC for wave 2 here, then we can't see that breached here anyway. That would also negate that count there as well. And it does appear that we have another little move down through here, which we can certainly see in silver. I don't know what chart we were on. Was it 2 hours? But either it's just another chart here, but this silver chart, but 1 and 2 up here and 3 here and 4 here, and we'll need to see 5 down here. This wave 4 here can pull back. I'll just take it from this high here roughly. So we're already at the 38.2% retracement level here for this, so that's all good. So we should just see that turn. So any higher than this here, then any higher move, you know, up here somewhere, then obviously we made a mistake at that point. But it makes sense to look at this as, you know, an ABC here for this and down for 1, back for 2 probably over here with an A and a B and a C, a bit messy, but either that high or that high. Yeah, so anyway, in the meantime, we should see gold and silver have one more leg down. So we'll pick it up we'll pick any long trade setups after we've got this completed here. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.